Welcome everybody to QB Power Hour. Today is Thursday, September 20th, and today's episode is Real Estate in QuickBooks Online, Part 2, Investors and Lessors of Properties. We're going to talk briefly about QB Power Hour, the sponsors and the host. We'll talk about the CPE process, and then we'll get into the main content and learning objectives, which is pretty much understand and identify how QuickBooks Online can help you account for your real estate activities, specifically for the people that do, for the most part, for the most part, they do investment of real estate and actually lease the real estate. And we're going to talk about the built-in tools and maybe some of the workarounds that we have devised or come up with through the times. Okay. Let's see. So what is QB Power Hour? We are a webinar series that it's on every other Thursday for the most part, October 4th and October 18th. The next episodes is every other week. October 4th, we don't know exactly which episode, what we're going to do. We're still working on that. Michelle Long is most likely to host that one. And then on October 18th, we did come up with a topic. We're going to do setting up sales tax in QuickBooks Online, and I'll be hosting that one. We usually cover tips and tricks and advanced insights that have to do with QuickBooks Online, QuickBooks Desktop. We try to split them, make it about 50-50. Last episode was QuickBooks Desktop 2019. So we're pretty even when it comes to that. So we're doing QuickBooks Online today, and then every once in a while, we'll have a special guest, third-party app, practice management tools, that sort of thing. Michelle Long is not with us in today's episode, but you want to definitely check out her books in Amazon and check out her LinkedIn group that has over 160,000 members. My name is Hector Garcia. There's my email address and there's my Twitter handle. If you want to tweet to me, tweet at me. I'm not sure exactly what the verb that goes with tweeting is. So there's my email and my Twitter handle. About the CPE process, if you need CPEs because you're a CPA or a certified bookkeeper, you must attend the webinar live. You will not get CPEs if you watch the recording. All of our episodes are recorded and posted into YouTube. You must be logged in for at least 50 minutes, answer 3 polling questions out of the 4 that we're gonna ask, and the certificates will be emailed to you within 3 weeks. Okay, fix that spelling error right there. So you will get it emailed within 3 weeks. We'd like to thank our webinar series silver sponsor, Avalara, the most popular app and service to manage multi-state sales tax compliance. Avalara tax compliance done right. Check them out, avalara.com. And our guest speaker, Seth David. Let me see if I can get him in. I don't see him on the guest list. Give me 1 second. Okay, now I see him. I'm going to make him a panelist now. There you go. So Seth, you should be coming up as an organizer now. So whenever you can, just let us know that you're here so we can hear your audio. Webcam is optional. There you go. There you go, Seth. Perfect. Right on time. Right on time, brother. So let me do the quick introduction. So this is the Seth David, not just a regular Seth David. This is the one. He's the chief nerd at Nerd Enterprises. His website is nerdenterprises.com. He's a host of Zoom In with Seth David, which I think is a weekly Zoom-based webinar / discussion series every Friday. So you want to check that out. If you have the slides, all those links are clickable. But you can find everything in nerdenterprises.com. He's a co-host of a brand new podcast, which you can find on iTunes and any other podcast aggregation services called The Authentic Accountant, which is hosted by Voice America. Very good, very high quality. Love those, Seth. He's a creator of the Nerd Enterprises Inc. YouTube channel, which was my inspiration for creating my own YouTube channel. Actually, I followed Seth's channel when I first started in practice, and I said one day I'll have a channel as big as his or bigger. And that's still on my horizon to have a channel as good as his or better. I don't think I'm getting there. I'm not there quite yet, but getting closer. And he's also the co-creator of a course that we built together called Video Marketing for Accounting Professionals. And if you download the slides, all those links should be there. Let's see. Some people are saying they can't see my screen. Seth, can you see the screen?
No, I just see your PowerPoint. I don't know if that's your screen, but I do see your PowerPoint that says CPE process.
Oh, okay. Yeah, hold on a second. It says that it's paused for some strange reason.
Hmm.
Come on, technology gods, don't fail me. Okay, hold on a second. Yeah, like it stopped moving for some reason. I mean, we don't need to do that much with slides anymore. I'll edit that post production. I'll add those slides in there. So Seth, what I'll do is I'll give you a minute to sort of introduce yourself real quick, and then we're gonna move right on to the presentation.
Okay, well, I don't know if I can say much more than you've already said about me. We do have
Then don't
the
say anything else. We're good to go.
Okay, I'm not going to say a word. Let's just jump into it, and
Okay.
we'll talk about doing accounting for real estate. We're going to be using QuickBooks Online. I'm going to assume that we have, it sounds like all CPAs and bookkeepers in our audience, so I'm going to make some assumptions here that you're already well versed in the basics and the fundamentals. I assume you all know your debits and credits. So we'll get into this, and then obviously I'll stop periodically for questions, and I guess we have to stop for polls, right? So Hector, you'll just tell me when to stop, just interrupt me, cut me off, whatever you have to do, because otherwise I'll speak for the rest of the hour in a single breath.
That's true. So let's start with the first poll just to get that out of the way.
Hmm.
Uh, so there are, I think that when it comes to real estate, there are several preferences out there. Some folks say, no, I'm going to use QuickBooks Desktop. Some people say, I definitely want to use QuickBooks Online. And some folks say, no, I definitely want to use an app for real estate. And then obviously some folks say, have a preference of desktop or online and an app. Seth, I think you particularly don't have any specific apps that you use or recommend, correct?
For real estate with QuickBooks, no. In fact, I think that's an area that's wide open. I've been talking to some developers about working on a few different kinds of apps that I feel we're screaming for, especially in terms of working with QuickBooks Online.
Okay. All right, perfect. So I got the polling question up just to kind of get your preference. I have to leave the polling question up for about a minute and a half to make sure that we get enough people. Because if you want your CPE certificates, you do have to answer. There's no right or wrong answers, which just gives us a pretty good idea of where we stand. I know, just so we can add some color commentary here while the poll is up. When it comes to the accounting piece, you don't need any apps. I would say that bottom line, you can do really good accounting for real estate. I think where people get hung up about apps is, hey, I want a rent roll report that tells me, who has a pet deposit and who doesn't. When it gets to that level, I think it's going to be very difficult for you to pull something like that off in QuickBooks Online. Maybe probably with custom fields in QuickBooks Desktop. What are your thoughts about that?
Yeah, actually, I've done it in both using custom fields. QuickBooks Desktop, of course, gives you more custom fields to work with than QuickBooks Online does. But the short answer is I was able to very closely mimic a rent roll using custom fields in a customer balance detail report. And you just tweak that and add the custom fields into the columns. You're never going to get a true rent roll out of it the way a true rent roll is laid out, but you can get very close using that report.
All right, perfect. So we have a pretty split. It looks like it's a little bit split between QBO and QuickBooks Desktop. It looks like it's very, very close. I think that the balance still skews towards desktop a little bit, but I think it's getting there to a point where folks start moving more to QuickBooks Online. All right, so those are the results. I'm going to hide the results. Seth, I've given you control, so take it away.
All right, so can you see my screen? And
Yeah.
I can't tell for sure which of my screens you're seeing. Are you seeing QuickBooks Online?
QuickBooks Online, Nerd Digital.
Beautiful. All right. So, the Nerd Digital is just a sample QuickBooks Online company file that I use to do videos and to do demonstrations. So you're also going to see things when I go into the chart of accounts that don't apply. But what I did was I gutted it out. There's no transactions in here. So we're going to start clean. And we're going to do things the way I like to do things in my style, which is by having the financial reports up, starting with a blank, and we're going to start filling it in as I go, as I record transactions, right? So I'm going to duplicate my tab here, and we're going to get started. So, excuse me, the first thing that I want to sort of make people aware of is, and again, you probably already know this because we're all accountants and bookkeepers, most of the action here is going to happen on the balance sheet. right? And we're going to start by recording. We're going to go through the process of recording a HUD-1. We can't actually start there because there's often things that happen before we go into escrow, right? And there's some things we need set up on the chart of accounts, which we'll set up along the way. But the key here is understanding that most of the action happens on the balance sheet. And also, speaking of a HUD-1, it's been about 2 years now, I think maybe even a little more, since the HUD-1 was discontinued. A lot of title companies are still using it, but they're incorrect in using it. The statement that we're going to look at today is a statement they're supposed to be using, which is called a closing disclosure statement, right? Any real estate transactions that took place after October of, I think, 2016 were supposed to be
15. It's 15 actually.
15, 15. We're supposed to be using the closing disclosure. So we're going to look at that. Now, the first thing we want to make sure we have before we even start recording a real estate, and we're going to look at a purchase today, and then I'll talk a little bit to what it would look like from the sale side of it if we were selling the property. But the first thing is we need an escrow clearing account on the books, because very often we're going to be writing checks into escrow ahead of time or paying for things ahead of time. And so I like running those through an escrow clearing, especially since there's often a long lag between when those checks get written and when escrow actually closes and everything settles. So that's the first thing I want to check on. So we're going to go into my chart of accounts. And if I don't already have an escrow clearing, which I don't think I do, we're going to create it real quick, right? So it's just another current asset. Some people like to create it as a bank account so that you can record deposits directly. Well, you can record deposits directly into any other current asset, but you can write checks out of a bank account so that you can use it that way if you need to. But generally, I do it as another current asset, and I just call it escrow clearing. And it's just that, it's a clearing account. So as I'm writing checks and funding money into escrow, it goes in, and then when I record the settlement statement, I'm going to take certain line items right out of escrow clearing as part of the settlement, and that's going to zero out.
And we
right?
have a
So we
we
want
have
to make.
we have a person asking what is escrow, so I'll answer that real quick if you don't mind. So
Mhm.
most of the times you use a third party to deal with real estate. It's going to be a title company or a lawyer. So whenever money is given to that third party, lawyer or title company, that has to do with the property, a down payment or something like that, there's escrow accounting, and it's like a bank account. And most of these title companies and escrow companies have a separate escrow account, which does escrow accounting, which is a whole another world. And you can ask these attorneys to give you a detail of the escrow if there was a lot of movement of money coming in and out pre-closing. So to simplify things, this is money that was given to the title company or to the lawyer before the deal was or during the negotiation stages, and that has to be moved back into the asset or whatever it's going to go whenever the money gets settled.
Right, and some states do require that a lawyer be involved in the process, others don't. I know New York requires an attorney, California does not. So yeah, sorry, I just assumed everybody knew what escrow was. So like Hector said, escrow it's really like an intermediate, it's like a financial intermediary. So money gets funded in through escrow. If there's a bank making a loan, that loan will get funded through escrow, and then everything clears out and zeroes out. I'm going to show you a little bit of what that looks like. So the first thing is, like I said, I wanted to make sure we had the escrow clearing account on the books. With that on the books, we're pretty much ready to start recording the purchase of a property. And so I've got an example of a closing disclosure statement. I know this is going to be small. I will zoom in, right? And this is, I purposely chose one that's pretty simple because I wanted to keep it simple for our purposes today. Rest assured, this can get infinitely more complex than what you're seeing here, but if you can get the basics down with what I'm going to show you here today, and especially since again, all have a good foundation in accounting, you should be able to sort of extrapolate from what I'm showing you today and get into the more complex scenarios and how to record them. And there's plenty of resources around online too to learn more about how to do this stuff. So we're looking at a property, and by the way, this is a real statement from a real client that I had from a few years back. I've just carved out the pages that give you, it turns out that the closing disclosure is really good for doing videos on, because after you get past the first page, you don't see the information about the property or the client or any of that anymore. It's all gone. So it's basically, this is pages 2 and 3 of the closing disclosure statement that I'm showing you. And it really just has the numbers. So that makes it easy for me to do this without having to worry about you seeing any sort of confidential client information. So we have a simple purchase. Now, in this case, the guy just bought a piece of land for $80,000, right? So, and if the purchase was for a building, eventually you're going to want to get an appraisal. Well, the appraisal is going to get done. You're going to need a copy of that appraisal because we're normally going to want to break out the difference between the cost of the land and the building, right? Because land generally appreciates in value, whereas the building depreciates in value. So that's really important, especially when it comes time to sell the asset, right? And we have closing costs. Oops, sorry, every time I click on the image, it zooms back out. I have to try not to do that. So we have closing costs summarized here, paid at closing. Okay, 4,531.94. Now again, to keep it simple, I'm just going to work with this number, but there's another page that gives you the details on what makes up this 4,531.94. You'll have title fees, closing fees, loan fees if there's a loan involved, other fees that will be included in this number, and you can get the details. And all that means, and again, since we all know accounting here, I don't have to tell you, that this would just be more line items in the debit column going to different expense or asset accounts, depending on whether it's something we want to capitalize versus expense, right? And a lot of the stuff can and should be capitalized. I also defer to the tax preparing professionals on this. I don't do taxes. I do financial accounting and CFO work. So I generally will put most of it on the balance sheet and then let the CPAs or enrolled agents kind of kick out what should have gotten expense. For me, it's just easier that way, this way, because I forget sometimes. I think all the loan related fees can be capitalized. There are certain things that can't be capitalized and I forget what those are, but most of it does get capitalized. So going on down the line, we also have a proration of the property taxes, right? These were because we do property taxes typically twice a year. In this case, this is the portion of property taxes that the seller had already paid, which based on the purchase date is really the buyer is going to be responsible for that, right? So that's what this is all about. And then in this next section here, we have the things that are paid already by or on behalf of the borrower at closing. This is the stuff that's going to be sitting in escrow clearing, frankly, right? So he made a $2,000 deposit. This won't be sitting in escrow clearing. This is the loan, the amount he borrowed from the bank to help finance the purchase of the property. Okay, we have a 1031 exchange in this case. So I'm going to talk about that a little bit and how that works. And then we have he had to take over the security deposits from the tenants who were living in the building because this is a rental property, right? And then finally, there was a rent credit that was due to one of the tenants, so that also gets factored in. And then as we total this all the way down to the bottom, we have the total due from borrower before any of the credits was $85,110.58. And when you subtract the $73,429 out of the things that were already paid for either by him in advance or by way of the fact that he took out a loan, when we subtract all that out, the cash is due and they mark it off for you from the borrower for $11,680.70. Right, so this is what he's going to have to write a check for at closing to finalize the deal. And I'm going to walk through this, but Hector, it looks like you had a question.
Seth, no, just clearly. So that when you're looking at when you're not looking at the HUD statement or the disclosure form that you're showing, and you're looking at just the bank account, what are the two numbers that you're going to see? I assume it's going to be the $2,000 deposit and then the $11,000 at the end, correct?
In this case, yes. But don't assume that that's always all you're going to see. It really, every case is different depending on, and like you said, there may not be a title company, it may be a private deal. So a lot of that can change. But yes, in this particular instance, right now in the bank account, we're going to see the $2,000 deposit that he made in advance. And that's the first thing I'm going to record because I'm going to go back in time and show what it would look like. And then I'm going to walk through an exercise before we even go into QuickBooks, because anytime I do one of these deals, no matter how simple I think it might be, I always sketch it out in a spreadsheet first to make sure I can get it to balance. Because once I've done that, it makes creating the journal entry in QuickBooks a cinch, right? So I always do that because if you're trying to do it while you're in the entry and it's not balancing, it just gets messy, and sometimes I've had to just kick the whole entry out and start all over. So it saves me a lot of time, no matter how smart I may think I am, to just sketch it out in a spreadsheet, make sure I get it to balance, because then it's just, once that's all done in a spreadsheet, it will literally, no matter how complex the closing statement, won't take me more than 5 minutes to book the entry, right? Maybe 10 if it's really complex. So let me show you actually exactly what, first I want to show you how we handle the $2,000 payment, the earnest money deposit. That's what they call it when you put a deposit down towards the purchase of a property. They call it earnest money, right? It's a deposit in earnest, and that's a check that gets written to the title company, and that's what we're going to record into escrow clearing. So let's start there. And Again, because this is a sample and I carved out a page, I don't even think I have dates on this, so I'm just going to make up dates. Okay, so let's just say that he had to write this check. For me, it doesn't matter. I don't care if you call it an expense or a check in QBO. Most stuff is done electronically these days, so let's just assume it would be an expense. And we'll call it some title company. I'm very literal with my names. All right, and I'm going to set up the title company as a vendor. Essentially, that's what they are, right? It's coming out of the checking account. And let's just back this up and say, back in August, he wrote the check on August 1st. This goes into that escrow clearing account that we created, right? And before I save this, let me just go to the balance sheet. And since we're looking at a blank company with no history, I'm going to just run it for all dates just so that it's absolutely certain anything I post will be reflected on this balance sheet the minute I save it. You'll notice there's nothing in here, a couple of $0 items because of other videos I've done, and you can't delete those inventory opening transactions. So that's why those are there. So we're going to say 2000, right? And probably what I want to do right at this point is I want to set up the class for the property, because I use a class for the properties and I also use customers for the properties on rental properties. And I want to pause here for a minute and explain why I do that. By using a class for each property, I can run a simple P&L by class and see all the income and all the expenses for that class. I can also cut up a balance sheet by class, which works really nicely in QuickBooks Online. From what I recall, much better than desktop deals with balance sheet-based class reporting. So QuickBooks handles that really nicely. And the reason for the customer is, especially with a rental property, I can't invoice on a class, but to track rents and specifically, who's paid and who hasn't and how much people owe, I need a mechanism for tracking it. So even though I may not be sending invoices out to tenants, I still use the invoice as a vehicle for tracking how much each tenant's rent was each month, and those invoices post, and as the rent checks come in, I apply them, and so I can see the difference between who owes what, and I can create something like that mock rent roll that we were referring to earlier. And again, for those who don't know much about real estate or real estate accounting, a rent roll is simply, it's like I said earlier, it's really a customer balance detail report with some extra information specific to a rental concern that shows you here's what their monthly rent is, here's their security deposit, here's their balance going into the month, here's the payments you've received, and here's how much they owe you as of today, whenever the report was run. That, in a nutshell, is what the rent roll is really all about. So let's create both a customer and class for this property. I'm going to just quickly add a new customer. We're going to call this 2416 West Victory Boulevard. That's my company address. You can send me a postcard if you like. And because I'm a speed freak, instead of retyping it in the class, I'm just going to paste that in and add it, because I don't like to type if I can avoid it. So that was really quick and easy to add. And so you'll run into this the first time you're setting up a property. Excuse me. You can also use location, which in this company file I've called division, right? That's in the settings. You can go in and change the nomenclature for the location. I'm not going to use that in this case, but you can. And actually that works really nicely in terms of cutting up the balance sheet. But it's only on the source part of a transaction. It's not on the target, which is another conversation for another day. But in short, it means you can't split a transaction by location or division in this case, whereas I can split transactions by customer and by class. So that's important to note because it definitely will impact your reporting and what you can and can't do there. So we're going to save and close, and then we're going to go look at the updated balance sheet just to see what that looks like. And sure enough, now I've got my bank accounts negative because I didn't have any money in there. But there's my escrow clearing for $2,000, right? Let me quickly just dump some money into the bank account just so that it looks like a normal balance sheet. We'll back this up to July 1. And we'll start them off with 100K. Okay, oops, wrong bank account. Fix that.
And while you do that, somebody's asking why use both classes and customer name I don't know if you explained it or maybe
I did,
rushed
but
through it.
I'll reiterate. Yeah, I did actually, because I knew that was going to be the question. So again, I can run a P&L by class that's really simple. I probably didn't clarify the way I'm going to now, though. That might be why it wasn't clear. A P&L by class is real simple. I can have one column for each class, which will be each property, that shows all the income and all the expenses and the net income for that property. When I build out the customer list, because we're talking about rental properties, I'm going to have a customer for each property. And within that, I'm going to usually set up a sub customer for each unit so that I can track the tenants individually. That P&L by customer is going to get very wide and consequently hard to read. Even if I filtered it for a single customer, it's going to have multiple columns. So the P&L by class is a much cleaner report that's easy to read, but the P&L by customer is going to give me more detailed tracking that I'm also going to need. So that's why, even though it looks redundant, I use both because I get different kinds of reporting which serve different purposes. So the quick answer is it's all based on reporting and
So
how I can get.
customer and sub customer is for the purpose of invoicing, and class is for the purpose of giving it to the tax person, something like that.
Right. And to be even more specific, the customers are where I'm going to track my receivables, my rent receivable, right? And classes, I can't do that, but I can get a much cleaner P&L by class, so that's why I do both, right? And I also mentioned that in both of these cases, you can split transactions, whereas with QuickBooks Online has the location or division function or feature, that cannot be split. There's a workaround on that. I've got a video on it, but another conversation for another day. Do we need to do another poll, Hector? This might be a good time.
We didn't, but I'm gonna go ahead and do it.
Okay, sorry.
Anyway,
I
yeah,
want to make sure because I've in the past run out of
yeah,
time on polls.
yeah. So
So,
quickly, I asked Seth to do investors for real estate lessers, and also maybe to talk about flipping properties. And then I had the bright idea of asking him to do a HUD, and he said, "Warning, if I do a HUD, that may be the whole hour." I said, "Nah, that can't be." It sounds like it will.
well,
So
no, we'll have time. It's because I
right.
used a very simple one, but
You know
go
that
ahead.
that's okay though. I mean, I just sometimes people just get stuck at that, at just recording the basis of the property. So I find it valuable to do that, and if this needs to be a lot longer,
Mhm.
then then we'll do more sessions. It's not, I mean, I may not be able to get Seth because it's kind of a privilege to get him to come in,
You can
um, but
always.
but I'll take care of it. It's okay, no big deal. And Seth, there's a lot of need for this stuff. Like, hint, hint, you should probably create a whole training program around around real
It's
estate.
on. Yeah, it's in my pipeline.
Okay.
It's so much to do, so little time.
Okay. So out of the four topics that we find the most interesting or valuable when it comes to real estate, which one do you find it to be the most challenging one, Seth, out of the four that are on the screen?
Let me look. So that's in the polls.
Yeah, you got property management, you got investors of real estate, which is what you're talking about, the
Hmm.
developers or people that flip properties, and then real estate agents and brokers.
Agents and brokers. So, my first sort of love in the real estate world was actually property management. I found that fascinating, and I've always tended to be drawn to things that were more complicated. Two reasons. As an accounting professional who understands how business and economics works, supply and demand, right? If I go into areas that are more complicated, there are going to be fewer people offering those services, and therefore I can charge more, right? So property management and in that area of real estate was something I purposely went into early in my career, also because I happened to sort of fall on an opportunity to learn how to do it from somebody. So,
Yeah, I
somebody
agree
who
with
had
you.
written a book on it. So
I
that
agree with
helped
you.
too.
So a quick note, we already did a one. I already did one on property management. So check out YouTube for that. And we're working on the rent lease property, at least probably part one of rent lease property now. So I'm
Right.
gonna hide the poll and give you control back, Seth. So thank you
Okay.
for reminding me
So
of that. So
absolutely.
go the entire
All right,
time.
I'll just wait for you to interrupt me.
Yeah, go
I'm
ahead.
going to rock and roll now. So again, so we recorded that $2,000 escrow payment, and again, now it's on the balance sheet. I went back and started us off with 100 grand. We wrote a check for 2 grand. That's in escrow clearing. So balance sheet wise, and I always like to look at it this way, I just transferred money out of one asset and into another, right? It's sitting there in escrow clearing, but it's going to get pulled out of there in a minute when we do the HUD one, right? Or the closing disclosure as it's now called. So now we're back to the closing disclosure, because now let's say it's 30 days later and escrow is closing. So the title company is going to process all the stuff. They're going to pay the government recording fees, title fees, loan fees, all that stuff. Like I said, that's really buried inside this 4,531.94. That's all going to get handled, paid, and escrow is going to process the loan with the bank, and everything is going to get dispersed, right? When you work for a title company, you actually have to prepare a disbursement. So that's kind of the inside of this, so to speak. So what I want to show you that I always do, and I think I started talking about this a few minutes ago, is I always sketch it out first on a spreadsheet just to make sure. Right, so I'm going to abbreviate some stuff in the interest of time. My purchase price is 80,000, right? And I'm just going right off of that closing disclosure. I just can't put both on my screen at one time. I could, it would be awfully cramped, right? So 80,000. My closing costs or settlement charges, really, right? We'll put CC because they call it closing costs. We're 4,531.94 cents. These are the costs, that the borrower is responsible for. And then we have prorated property taxes, right? So we'll call it PT for property taxes, and that was 578.64. And that was it for the charges for the borrower, right? Or the portion that's called due from borrower at closing. I'm going to quickly sum this up, because you're going to see where this is going to come in handy later to confirm. If you remember when I showed you a few minutes ago, this total was at the bottom of the closing disclosure. So I do this to make sure I can get to their totals, right? In the next section, we have the stuff that was paid already by or on behalf of the borrower at closing. So first we have that deposit that he paid in, right? We're going to put these in as negatives, 2,000, right? Then we have the loan. So the bank came in and says, sure, we'll loan you 56,000. So minus 56,000. We had the 1031 exchange, which was 13,866.93. Essentially, and just really quick, because we don't have time to go too deep into this today, what it means for those of you who don't know is if I sell a property and buy a similar kind of property within, I believe it's 45 days, I can actually, or maybe it's 90 days, I forget, but I can actually transfer the basis of the property that I sold while I went and bought this one into this property, so I don't pay taxes on it until I've sold the new property, right?
Okay,
So it's a
can I
way of
add?
avoiding paying
Yeah,
taxes. Sorry?
I like to add something just simple. The 13,000 represents of the money you're not gonna get at closing, and it's going back as a down payment to the next property. So just that's the
Right.
simplest way to see it.
Yep. Yep, that's exactly what that means. And then we have the actual rental property related stuff next. So we have security deposits, right? We had one for 480 and we had another for 700. Okay, and then we had a rent credit for 382.95. Okay, and then we're going to subtotal this part because it should add up to that 73,429.88 that they showed us for this whole section. 73,429.88, 85,110.58. Let me bring the closing disclosure statement back up on screen so you can kind of see this, because I know I'm very visual. I need to see this stuff, right? So this is what we just laid out on the spreadsheet just to confirm I can get to their numbers. And don't assume that the statement's going to be right. I've run across ones where it didn't balance, and we had to call the title company and say, you guys messed something up. It doesn't all balance, right? So that does happen. It definitely has happened. So that's another reason for confirming this before you go and create the entry. So we have the 80,000 purchase. The settlement charges, once again, can be broken out into more detail when you record this. Like I said, different kinds of fees for closing costs, recording fees, and so on, title fees. And then we have the property tax prorated amount that the borrower is responsible for. And that all totals the 85,110.58. We've got it here, 85,110.58. And then in the next section, again, paid already on or buyer on behalf of the borrower. So the 56,000 was paid to the seller on behalf of the borrower, because now the buyer has to pay that back to the bank, right? So just so you have the, the full sort of context here. Okay, so now we're ready to record the entry, but now the journal entry, like I said, is going to be really, really simple because we have it all laid out right here. So let's go back over to here and let's record our journal entry. And the journal entry should be dated. I always make sure it's dated exactly whatever the closing date was, right? So let's pretend like it's September 1st. And what I'm going to do initially is I'm just going to put in my debits and credits, right? Get the entry to balance, fill it all in. Your down arrow keys, by the way, work really well in the numeric fields in the journal entry. But once you click away, you kind of lose it, right? But you see how easy this is to do my debits, right? And then I have my credits. So these are it's not gonna like the negative number in the journal entry screen. So if I was doing this myself, I would probably take the time to reverse the polarity of these numbers, but for now it's easy enough just to go in and remove the minus signs. Okay, almost there. And one more, and we should have a balanced entry. Well, not quite balanced. We still have the cash due to or from the borrower, but that should be the plug, right? So going back to my HUD1 at the very bottom here, the cash due to or from the borrower is the 11,680.70, right? So if that's money that's due from the borrower, that's got to be a credit, right? Because that's going to come out of the bank account. Okay, and it looks like I'm not quite balanced because I left out the 10. No, that's there.
You still got some negative signs on the 700 and the
Oh, that's
382.
why. Thank you,
Yeah.
Hector. That is exactly why I'm off. Okay. Nope. There. Okay, now I have a perfectly balanced entry. Now, going to fill in the accounts, right? The 80,000 is going to go to an account. I need to create an asset on the books if I haven't already called, we said the address was going to be 2416 West Victory Boulevard. I always name the asset for the property address, but wait, there's more. So this is going to be, you can do a fixed asset or other asset. Here's the difference between when I do which. If I'm in the business of, if we're talking about flips, then it's an other asset because it's really inventory, right? I can even do other current assets in that case because these properties are really more like inventory. I buy it, I fix it up, I sell it, right? So in the case of a flip, that's how I'm going to classify it. If I'm buying it to own it and rent it, I will generally put it in fixed assets, right? Because that's the plan, is for me to own it and rent it. So it truly is, I think, a better definition of it to call it a fixed asset,
I
right?
think it's
So
easier to say if you're going to depreciate it, which means you're going to keep it and produce income with it, rental, fixed asset, if you're
mhm.
not other asset. That's the way I explain it anyway.
Yep. I like explaining the inventory example though, because that makes it clear really the difference in the whole business model, right? But no, that's a great way to explain it for
Your
sure.
example's better.
No, it's six of one, half a dozen of another. That's all. Um, there's no right or wrong. So, all right, so let's call this a fixed asset, but we're not done because I don't just stick everything there. What I want to do is, and like I said earlier, this is, in this example, this is a piece of land. So I want to create a sub account. I can type a colon to let QuickBooks Online know I'm about to add a sub account. And we'll call it land. If it's the building, I usually just call it original cost of the, because that's the original cost of the building. So land, again, we're going to do fixed asset. And we can just call it, I think they have a separate subtype for land. There it is, right? And then I'll save and close. And for some reason, it didn't take my sub account. So let's go fix that real quick. That's also why I love having two tabs open, because it makes this kind of stuff really quick. I didn't have to lose my place in the other screen. So let's go to 2416. And that's a sub account of that.
I hate that bug in QBO where like the sub accounts don't easily get created in some
Yeah,
screens.
it doesn't come in checked off by default, even though I typed a colon. That's why I got messed up on that one. All right, so this is going to be all the settlement costs, right? So for now, I'm just going to put it to an expense account, but keep in mind, as I said earlier, this is technically not correct. A lot of this stuff probably can and should be capitalized. But again, today, in the interest of time, I'm just going to quickly, record these as an expense. And I hate the detail type thing. From what I understand, it's not even really used anymore for anything. So I'll just do other miscellaneous.
So the settlement expense, which is basically your closing costs, you're calling them an expense, not a change to the capital gain.
Again, it really should be. It's most of it gets capitalized. You know what I'll do? I'll actually treat it as a fixed asset because most of it actually does get capitalized. But that's what I was just saying. In the interest of time, I was going to just call it an expense. But here, let's change that to fixed assets also.
Yeah,
And I will
we're kind of
also put,
nerdy in these webinars about specifics.
fair enough, fair enough. I just don't want to take too much time on some of the details because I want to make sure people understand the bigger picture, just how to record this stuff. A debit is a debit. So it's just a question then of where I'm putting it, on the balance sheet or their P&L. But you're right. Point absolutely taken. And now if I go back and, I haven't recorded it yet, but we want to be able to look at the balance sheet once I do. Okay, this was property taxes. That most definitely is an expense. And again, I'm just going to stick this in any miscellaneous for the detail type. Okay, now this is what comes out of escrow clearing, right? Because remember, we wrote that check into escrow clearing. When I write a check out of a bank account and it goes into another asset account, I'm effectively debiting the asset, right? And that put it into the asset. And here I'm going to credit the asset to take it out and zero it out. This is going to be loan payable for 2416 West Victory. And you'll notice I like to be very consistent in the naming of things in the chart of accounts so that it's very clear which property something is related to. Right? It really helps later on, especially when you have a lot of properties on the books. This was the 1031 exchange. So we're also going to put this, for now, I'm going to put it in the asset. So exchange 2416 West Victory. Because again, it serves to go to the basis of the new property. We're effectively transferring the basis from one property to the other.
And a quick thing while you do that. So someone is commenting about property taxes, whether it
Mm-hmm.
should be an asset capitalized or an expense. So just keep in mind that when you go and pay your property taxes at the end of the year, as the new property owner, you're going to pay for the whole thing, right? You're going to pay for the
Mm-hmm.
whole, let's say, $10,000. But if you bought the property in the middle of the year, it is possible that the bank where the mortgage was in the old owner was collecting accrued property taxes month to month.
Mm-hmm.
Therefore, they're going to give you that accrued property taxes back, and you're sending it to an expense. So it all depends on like how this is working, because technically, the property taxes that you paid for during the time that you own the property, it's going to be the expense. But the
Right.
property taxes that were credited for you, it's part of the settlement or the investment of the property. So I think that people are getting a little bit hung up on that, about that, and it is
Okay.
it is different depend on the
Yeah,
timing.
and it depends on what part of the closing disclosure this falls out on. In this case, it was under adjustments for items paid by the seller in advance, right? So they're saying this was paid by the seller, but it's really the buyer's responsibility based on the timing of when he bought the property. So they're putting that expense back on him,
Right, they're reducing the amount of money that. Well, I'm
that
not
he's going to owe.
correct.
Yeah, because it's already been paid, right? Okay, now we have the what do you call it? The rental sort of credits, right? So security deposits. This just has to go into our security deposits payable. Now, keep in mind, in a real case, we'd have to find out which unit and tenant these were related to because we would want to associate that with the appropriate customer and class, right, for the property. So that's really important to keep in mind. Obviously, I don't have that information here. So that's going to go in other current because most leases are not more than a year. Just other current. Okay, and same thing here. So just again, bear in mind, we would want to put the right customer for the right unit here in the customer and here in the class. I hate that these columns don't come down. So the name would be, this is where we would have the property for the, or the customer for the property, but a sub-customer for whatever unit this security deposit went with. And here in the class, we would simply have the property. So that much I can do. I can at least do the properties here, right? And same for this line. And same for, this was a rent credit. So this is something, I guess somebody overpaid their rent. So this is going to need to be applied towards somebody's rental income. So I'm going to, theoretically, you could put it on the balance sheet, as almost like a prepaid. But because it's so short-term in nature, it's probably not going to live more than a month. I just offset it against rental income. And again, I would want that to be associated with the appropriate unit where applicable. So again, the class, we would just have the property, but here we would need a sub-customer for the appropriate unit that this rental credit goes with. Generally speaking, when I'm taking over a property with, on behalf of a client and doing something like this, what I will usually do is talk to the seller and make them give us a whole detailed set of reports. I need to know who all the tenants are in each unit. I need to know how much you have on security deposit from each one as of the sale date. And in the case of something like this, I'd need to know, obviously, which tenant it was who, overpaid or prepaid their rent. And don't think this doesn't happen a lot. I've had clients who had rental properties where their tenants were people who traveled a lot, and they'd pay 6 months in advance. Now, in a case like that, I'd do it as a prepaid, right? But again, in a case like this, where especially looking at the amount, it's probably not even a full month's rent somewhere. Again, it's not going to live more than a month. I'm not going to bother putting it on the balance sheet and then applying it, the next month. Now, this last piece is the piece that ultimately comes out of the bank account. So a lot of people will probably want to just put the bank account here. Now, this is my own little hang up. I don't like using a bank account in a journal entry. So what I will normally do is book this through escrow clearing. And when the client writes the check to escrow for the 11,680, same as I handled the 2,000 up here, I will record that as a payment out of the bank account through escrow clearing. So I'm going to save this, and then I'll show you what that looks like, and then we'll take a look at the updated balance sheet. So saving, also very important, because I'm using one escrow clearing account for all the properties. So very important to associate this with the property, because that way I can run a detail on that balance sheet account and total it by customer. So I can see very clearly whose money is still sitting in escrow versus whose has cleared out, especially for clients that are very active where they're buying and selling a lot of properties all the time. So let's save this. And in this tab, I actually already had the balance sheet going on in the background.
And so, someone's commenting, what's the problem with using the bank on a journal entry? I guess there's no problem. That's just your own thing.
There's no problem. Like I said, it's my hang up. I'm OCD that way. I don't like seeing a journal entry in a check register.
I'm with you.
Yeah, I just think it's not clean. But like I said, that's my own OCD, my own stuff, to use a more polite word than I'd normally be inclined to use. So now we have the negative escrow clearing, right? But here you can see the asset. We have the 1031 exchange reducing the basis. We have the land for 80,000 and the settlement charges, which also go to the basis. Okay. So the next thing is we need to deal with the payment to escrow that the buyer would have made probably on the same day or right around it. So again, that's a simple expense, because again, usually it's wired. It's not usually going to be a check in this day and age. Right, the payee again is going to be some title company. The date would be 9/1, and this time it's for the 11,680 and 70 cents. And again, I'm going to keep the class and I'm going to keep the customer. And I need to go back and do that same thing with the $2,000 that he originally paid through escrow. Right, because here's what I'm talking about. Because they keep reverting my balance sheet back. So when I run it for all dates, it does zero out. Let's go in here. And what I want to do is I want to group this by customer. This is the escrow clearing account, right? And so I just want to fix this. This was the journal entry for 2,000, needs to get associated with the property. I normally would actually probably copy the property down in both of these columns to every line item.
And that's a good one, because I have a couple people asking, why did you not use the name and the class across every single line in the journal entry?
You should. I'm just trying to move fast here.
Yeah.
So,
easy answer.
So, and then, and some of you, if you're not experienced with QBO, may not know this, but this is really cool. When I go into customize report, let me just back up because we're trying to confirm that the escrow clearing zeroes out. Again, in this case, it's really easy to see that, but it's not always going to be this clean, right? So I want to go customize, change columns, and I love this. I do this on every report where I can. I want a debit and a credit column. I'm going to move those up ahead of the amount. Run that. Let's close the navigation there. So now it's really clear to see, right? Exactly how and where everything clears out and zeroes out. So I always do this as part of the process. Once I'm done recording the journal entry for the property purchase, I always make sure that the escrow clearing account zeroes out. And this is how I do it. And usually I'll just memorize this report because now as I add more properties, they're all going to be here totaled by property. Okay, any questions so far?
Can we look at the balance sheet just so we can see the basis of the property?
Absolutely.
And like in the chat section, people are really geeking out about the 1031 stuff. I would
Okay.
say, yeah, for the most part, I would say ignore it because it's just not that common. And we probably need to dedicate a whole
Right.
episode to Section
The,
1031. It's
yeah,
just plugging it there.
the piece that I'm missing is somewhere else on this balance sheet would have been the asset for
Right,
the original property that got sold, and that would need to get transferred here too. So ultimately, you would have probably an increase to the basis,
right.
right? So that's, and I'm sorry, again, it's just we don't
That's
have a
okay.
lot of time, so I couldn't go too deep on this stuff. But that's what would happen is there would be another asset somewhere on this balance sheet for the property that got sold. You would transfer that over here to this same account, and so it would aggregate to the correct escrow amount or the correct 1031 amount, so that ultimately, yes, you would probably have an increased basis rather than a decreased basis. This is just the part that got credited through escrow because of the exchange.
Okay, yeah, perfect. So, I don't know how much over we're gonna go. I don't know if Seth can even go 5 minutes over, but I'm gonna run the last polling question now, just in case for the folks that have to go on top of the hour. If we got time, maybe he'll do like an invoice for a rental property, or maybe he'll just
Yep, and then I want to talk a little bit about, the property improvement costs that we would incur for,
so you
building
so,
or,
so
yeah.
you're okay with going over?
I can go over by a few minutes. I actually have to jump on to another webinar that starts at 10, but I'm only a participant in that one, so I don't mind being a few minutes late to that.
Okay, all right. So we'll cover as much as we can in maybe a 5 minute overage. Okay. So we got the last polling question out, the fourth polling question. Again, you only need to answer three out of the poll in order to get your CPE. If you don't mind, I'm gonna take over the screen for a second just so I can
Yeah, yeah.
show your promo page,
Okay.
Seth. It was my idea to throw Seth a bone here. So yeah, go ahead and do that. Look, learning real estate accounting, it's 6 to 10 hours at least, and that's
Yeah.
assuming that you're an advanced level and you understand bank reconciliations, checks, and all that stuff. So if you're watching this live, you're probably an accountant already or QuickBooks Pro advisor. If you're watching this in YouTube, a lot of this stuff is going to go over your head just because it just takes a while to learn this stuff. Like none of these things can be learned overnight. I think some folks have unrealistic expectations of how long it takes to do these things. Either Seth and I, it took us 15, 20 years to learn how to do this and doing it wrong 30 times until we know how to do it right. So, just have patience with this stuff.
Hmm.
Just have patience with this stuff. You may need to go through a couple of HUD statements, and just you may need to practice it quite a bit until you get to a point where you feel really comfortable with it. Okay,
Yeah.
I'm going to go ahead and close the polling question. I'll show the results real quick. So it looks like we had a small percentage of people that didn't learn something new, but the rest did. So so it sounds like all in all it was positive. So let me see. Do I have the capacity to share my screen? If you don't mind, Seth, we got about 3 more minutes until people start
Sure.
jumping off. So let me get my screen here. Okay, so you can contact Seth. We're gonna go over a little bit, so it's gonna cover a couple more things. So stay over a couple minutes. Seth is gonna send me a copy of the HUD, and I'm gonna email it to everyone. I think if you email him, can you send him a copy as well, or
Of course, I'm happy to.
yeah?
Yep.
So just email Seth. That's better. Email Seth. So you have his contact information. He will send you a copy of that HUD, the PDF that he was working on. There's his phone number. There's his email. I was strongly encourage you to hire him for maybe like a 5 hour package to do some advanced training. I would say there isn't that many people that I know personally I would trust to refer clients to for advanced, complicated QuickBooks stuff. And Seth is definitely the next one in line for me when people say, "Hey,
Thank you.
I really want somebody that's advanced, that knows stuff, that has proven experience." And if I can't do it, and one of my partners can't do it because we are doing other stuff, I definitely send it to Seth. So consider working with him directly for coaching and training on any advanced topic. Seth, I'm going to send it back to you, and you go as much as you can on the sort of on the rental side of the business. Or I think you were doing one more thing you
Sure.
wanted to show us.
Yep. So I definitely wanted to talk for a couple minutes about the rehab, and because rehabs and flips, accounting wise, basically the same. The only difference is rehab suggests I'm keeping it. I'm just fixing the place up. Flip means I'm fixing it up because I want to sell it, right? But accounting wise, it's still going to go into the same asset area. So I'm usually going to have another account in here under the property address called improvements to property. Now here's where it can go one of a couple of ways, right? And what I mean is, some people, of course, want to see it broken down. What did I spend on carpentry? What did I spend on framing? What did I spend on electric and all that? And you can create all those detailed sub-accounts under improvements, but it's going to make for a long and frankly kind of ugly balance sheet, right? So what I prefer to do to track all that stuff is use items in the item list. And the QuickBooks Online equivalent of the item list, as we call it in QuickBooks Desktop, is just your products and services list. So I will create products and services that are mapped to that improvements account. Obviously, I'll need to create a list of products and services for each property that I own. But I don't mind having a long, ugly products and services list, because that's not going to show up on a financial report, but it still gives me the ability to do great detailed reporting if I want to, because I can take, the transaction detail report from a drill down on the improvements to property account and subtotal it by product or service if I want to, right? So I can get at the details that way while still keeping the balance sheet nice and clean. And I can just see the total improvements to property here and describe it in the reporting by product or service, or item, as we're used to calling it for those who are more familiar with desktop. So that's, my sort of 2 cents or 10 cents on the on how to deal with that part of it, because that's what's going to happen in a rehab or a flip. Right now I bought the property, now I'm going to go out and hire a general contractor and all these other people who are going to do all this work, and I need to track all those costs right back to that property. All of that goes to increase the basis, so that when I record the sale, I'm going to, of course, have to calculate my gain or loss. And again, I do that in a spreadsheet, right? I'm going to need to zero all this out. Every fixed asset, every asset part of the balance sheet related to that property is going to have to get zeroed out. And the offset should go to my gain or loss on the sale of that property, minus a few additional expenses that might hit the P&L at that same time, things that don't get capitalized, so to speak. So that's the quick sort of high level overview of how to deal with the rehabs and flips beyond recording the purchase, right? And if the project went on long enough, that, Hector, what's the tax rules? Do I not record depreciation if I know I'm going to sell it? Or if it crosses over a year, don't I still have to record depreciation?
The way I do it is based on whether or not it was placed in service. And the only way to prove, not the only way, but the most tangible way to prove that it was in fact placed in service is that you rented it. So
Okay.
one of the crazy things that happen is someone will buy a property, at the beginning of the year, let's say, and they spend millions of dollars or whatever in rehabbing it, and then they'll rent it in December. Well, if that's the case, then I can start depreciating it. But I only get 1 month worth of depreciation because it's really based on when you started renting it officially. So I
Right.
would recommend not to depreciate the property if it's not actively placed in service. But I
Right.
think
Yeah.
other accountants may disagree with me, but I think that's the way that's the way I do it.
Yeah, I mean, my role as the non-tax guy is don't depreciate it unless you absolutely have to. Why create extra work for yourself unnecessarily? But then I ultimately defer to what are the tax rules. That's why I ask, because I'm not a tax guy, so I don't necessarily know all the tax rules on this stuff. So we also wanted to look at how to deal with the rental part of it. So remember that we created, and if I go into my sales list, I can go right into my customers, right? And there's gobbledygook in here because these were like data that I pulled in from a client's real data, and then I just did searches and replaces to change letters around so that it wasn't their actual client names. So here's the customer we created for this property is 2416 West Victory Boulevard. Let's quickly create a sub customer for a unit, and then I'll quickly show you how I handle the invoice, especially the first invoice where we're also picking up a security deposit in many cases. So we're going to actually go up here and say new customer. And I just go right to the display name as. That's the only thing I really need here. So I'll call it unit A. And I forgot to do the sub customer part. So let's edit that. And we're going to check off here where it says is sub customer 2416. And real quick, what I do, because you're going to have tenants moving in and out over time, and I like to preserve the history by tenant. So when this tenant moves out and the next one moves in, I'm not going to just change this. I'm actually going to, because I'll put all of the current tenant's information here in this profile. And then when this person moves out, I will make it inactive and create a new unit A. While it's empty, I'll just leave it as unit A. And when somebody eventually moves in, then I will edit that one and put in the actual tenant's information. That way, if I ever need to, I can go back and see all the history of exactly who was in the unit when and what may have gone on with that unit in terms of the accounting, right? You never know when your client, the property owner, is going to wind up in court with a former tenant, so it's important to preserve that information, right? I actually had jury duty for a rental case, an eviction case, which was kind of interesting because I had done so much accounting work for that. I thought for sure they'd throw me out of the jury when I told them that I'm an accountant who deals with real estate. They actually liked it. So I was like, oh, all right, now I know. So we've got the unit, I've got the, the parent and the sub, you can see that here, right? 24 West Victory, unit A. So now we're going to create a new transaction. We're going to do an invoice. And here I need some products and services, right? The first one I'm going to need is rental income. So again, I'm going to create that on the fly here, right? And it's a service. And it's going to go to the rental income account that I created earlier. There it is. Not purchasing it from anyone. So we can save that. And then I need a security deposit item. And I only need the one that's going to be mapped to the one liability account that I created, because I can go into that detail and total it by customer, by drilling into the liability account from the balance sheet. So I don't need to create all these different security deposits tenant by tenant. So even though it says income account, I can put any account I want in there. And so for this, I'm going to do security deposits payable, right? And if that's confusing to anyone just because it's not an income account, here's how I teach people to think this through. I'm producing an invoice. My debit on any invoice is to accounts receivable. Anything I'm putting in here is a product or service, and whatever quote unquote income account it's mapped to is what's getting the credit. So I'm debiting accounts receivable. This is linear, it's rental income, the product going to rental income, the income account, right? So that's getting credited, credits increase income. Security deposit, same thing, I'm crediting a liability, which increases the liability. So that should help think through the logic of this, and you'll see how and why that makes perfect sense. So let's say the rent is $500 a month, and I'm collecting 2 months security, right? That's $1,000. The tenant had really bad credit, and that's it. And then I'm gonna do this, and then I'm going to make this recurring. So let's save this first. And then we're going to quickly make this recurring, right? So it's going to be scheduled. I don't need it done any days in advance. Monthly on the first day of every month. I did this one for September 1st, so the next one's going to start on October 1st. And what I will often do on this is I'll say, and after 11 occurrences. And here's why. Usually initially my lease is for 1 year, and then it's time to increase the rent. So I don't want it to keep producing invoices after 12 and I'm doing 11 because we've just done the first one. That will kind of force us to stop and take a look and say, hey, do we want to increase the rent for this tenant, right? So that's why I don't do it with no end in sight. I end it after 11 occurrences. It's kind of like a workflow that I do to make sure that I'm reminded, if not the client themselves, to analyze this and see if we want to increase the rent for that tenant. So that's how we deal with this. And the only thing to be aware of is while this invoice has not been paid yet, we have kind of a false liability in terms of the security deposit part of it, right? Because that's going to show up on my balance sheet as a liability. It's really not a liability until that invoice has been paid, but there's really no way around that, right? We kind of just have to deal with that fact and hope that they pay it quickly enough that that doesn't become any kind of an issue. Any questions?
No, no, we're good. I mean, the questions, some of these questions have 20-minute answers. So,
Okay. Okay, fair enough.
so
So, and feel free, you've got my email. Feel free to follow up with me. I'll be more than happy to answer your questions. And as Hector suggested, I can be hired to get really deep with you on it if you want. I'm always more than happy to, to help out where and whenever I can. So just take advantage of that if you want to.
yeah, just a quick note. Somebody's asking if the recurring invoice would have a security deposit in it, and the answer is no. I guess you forgot to remove it
Yeah.
from the,
So
yeah.
okay. So actually, I'm glad that was brought up. Really important. I did this to show you how to do the security deposit. Correct. This would come off the recurring. You would certainly not want to get. Well, I mean, unless the tenant wanted to give you a security deposit every month, right? That'd be nice. No, but all kidding aside, that's absolutely correct. When I go to create the recurring, I should have removed the second line, which was for the what's it called, for the for the security deposit, so that we're only recurring the rent part. But you saw just how easy that is to fix and remove it.
You can always count on our attendees to pick at any minor mistake that we make while presenting. So thank you
Absolutely,
guys for
nothing
that.
wrong with that. Hey, look, I make mistakes every day. I tell people I will always make mistakes. I will always correct them when I'm aware of them. Real quick, if you want to see where those recurring transactions are, because as you have a lot of tenants, you're going to have a lot of these recurring invoices. It's right here. So I went to the gear icon, right? Not the plus sign. The plus sign is where we go to create transactions. This is where we go to get into lists and settings and things. And in the recurring transactions list is where I will now find this. So what I did was I actually changed the invoice there. What I really needed to do was change the recurring transaction itself and come in here and remove the security deposit part and then save the template. And everything else will work fine from there. Okay, and now I can run a receivables report if I need to confirm whether or not my rents have been paid, whether or not the invoices have been paid. So again, that's the beauty of using customers to track the rental income, because you get to track the related receivables. Other thing I don't think I did is, you want to put the class on there if we're using the class.
Make sure you don't miss out your next appointment, Seth. I know
Right? No, I know. I can
you
go
get
another
excited.
5 minutes.
You can get excited like I do. I think you should
Yeah.
also show the audience, for the folks that I'm sure everybody knows you, but show them your website and all the resources you have on real estate, because I think you have a lot of articles and a few
Yes.
videos on it, right?
So in fact, I have a whole area on accounting for real estate, but it actually doesn't focus on this as much as it focuses on the accounting for the real estate broker or agent, right? The person who's actually selling or buying the real estate or representing the seller or buyer of the real estate. But yeah, here on my blog, I have different categories. So if you see industry focused, that's where you'll find the real estate part. And I do have a whole series of videos, including like a 3-hour webinar that I did on accounting for real estate brokers and agents, that walks you through a lot of the same stuff that will apply there. In fact, it shows you how to use the location to get a really nice balance sheet cut up by property. I even get a little bit into the trust accounting part of it. So within industry focus, you'll just go to real estate, and that's where you can find all my stuff on QuickBooks. It's all QuickBooks Online now. I've heavily focused on that because real estate is one of those areas where I haven't felt that QuickBooks Online there was any reason for that industry to hold you back from going to QuickBooks Online. I think QuickBooks Online is very well equipped to handle accounting for real estate. The only limitation I've ever run into is the fact that I only get like 3 custom fields in QBO. Hasn't been a deal breaker for me.
Yeah, it's really the custom reports.
Yep.
Seth, anything else?
If nobody else has any questions, then I don't have anything else that wouldn't take a whole lot more time to go into. So
Yeah, there was one question, but it's how to create a rent roll, but I think that you just not enough
yeah,
time for
that's
that.
more than I have time to do
Yeah.
now, but I'll give you the quick answer so you can tinker with it. Is you're going to go create a customer balance detail report, and then you're going to customize that report and use your custom fields. You'll want a custom field to track the security deposit amount by tenant, and you'll want a custom field to track the monthly rent amount. Even though it's on the invoices, to get something that looks as close as you can ever get to a rent roll, you still need it in a separate column and a custom field. And then the third custom field I usually use for the move-in date so that in the rent roll I can track, again, we can see each month as we're looking at that report when it's time to, plan on them having their rent increased. So I like having that move-in date there. That's important, and that's normally something that would appear on a rent roll too. So that's, hopefully that gives you enough information that if you know how to tinker around with customizing reports, you'll know how to develop it from there. But again, follow up with me, and if I can help at all, I'd be more than happy to.
Thank you so much, Seth. Appreciate it. It's an honor to have you in our. It's been 4 years, and first time we invite you in, so it was absolute honor to have you here, and
It's an honor
and a
to
treat.
be here, to be invited. So
Thank,
thank you.
thank you so much, Seth. All right,
All
guys.
right.
So make sure you check out the pre-recorded video I did on property management. That's on YouTube already. The link is on the screen, and that's also in the QBPowerHour.com archive. So we could put part two in the can for real estate. We probably got another three, 2 or 3 more parts coming because obviously we didn't cover everything we wanted to cover. So in 2 weeks from now, we'll have another episode on October 4th. We don't have the specific topic yet. Michelle Long is working on that. On the 18th, I'll be doing setting up sales tax in QuickBooks Online. Also, check out my podcast. It's called The Art of Advisory. It's on Facebook and all the podcast platforms. Just search for Art of Advisory. You will find it. And consider attending my value pricing class on creating options and packages. That's going to happen on November 2nd. It's going to be a 3-hour webinar. It's going to be a repeat of a very popular webinar I did about a month ago. We had a few folks saying that they wanted to attend that couldn't make the specific date. So now it's an opportunity for you to attend it. That's going to be November 2nd, 2018. And you go to valuepricing.net to sign up for that. Once again, thank you, Avalara, for being a sponsor of QB Power Hour, the most popular app for managing multi-state sales tax. We'll be doing and we're doing a couple more episodes with Avalara about sales tax in the next coming weeks. And strongly consider attending QuickBooks Connect if it's not already in your plans. I believe Seth is teaching a class there. I'm teaching a class there. Michelle's probably teaching a class there. It's really the best conference out there for QuickBooks nerds. I mean, it really, really is. It's worth checking out. And finally, join the Facebook group and continue the conversation in there, and send any topic suggestions or sponsorship requests to qbpowerhour@gmail.com. Thank you very much, folks, and you have a wonderful day.